Good day, subscribers. Thank you so much for joining us today. My name is Graham, and welcome to the Financial Education Channel. I'm so happy, finally. We've been talking to each other for probably like a year and a half. I finally got Jeremy on my channel today. So if you're not already familiar with Jeremy, he has a slightly bigger channel than me, like 220,000 subscribers, where he talks about the stock market and everything that goes along with that. And Jeremy, by the way, has grown a $200,000 stock portfolio by the age of 25. And when it comes to stocks, I really trust his judgment. So today we're going to be doing besides GoPro. But anyway, we're going to be doing a video today about stock market investing for beginners in 2019. Everything you need to know from start to finish, from A to Z, exactly how to get started in doing this step by step. So with that said, let's first talk about why would you choose, or why would someone choose to invest in stocks in the first place?
Okay, so here's how I view things. When I got started in the stock market, I was a natural saver. And here's the thing, like if you're trying to make your money into money, there aren't a lot of avenues that are realistic for you. Real estate investing, if you don't have much money, it's hard to get into, right? Yeah. There's a certain cost you have to get into. Stocks, you can get into stocks if you have $100, $200 saved, $500 saved. Like you can use the Robinhood app, which is completely free, no trade commissions or anything
link
like that.
In the description. I'm going to be shameless. Affiliate link in the description. If you use that link, by the way, you end up getting a free stock. I end up getting a free stock. Win-win. Yeah. You may as well do that.
Yeah, you
link in the description.
Literally trade for free, so there's almost no cost to getting into it, okay? Second part is you get to own great businesses, okay? So let's say you believe in Apple. You see how much money Apple makes all the time, okay? And you're like, that business is probably going to do well in the future, okay? You can go ahead and read the 10Ks and 10Qs annual reports on their investor relations page. You can Google that, and you can literally learn more about Apple's business and whatnot. And you can go ahead, and if you decide that's a good investment, obviously there's a lot more that goes into that, but that just kind of shows you the power of it, okay? You want to invest in Google? You can invest in Google. You want to invest in Facebook? You can invest in Facebook. You want to invest in Alibaba? You can invest in Alibaba. Yeah. Like, it doesn't matter what company, as long as it's a public company, you can actually invest in them. And if that company does good financially over the coming years, you're probably going to do very well over the coming years as well. Short term, anything can happen, but a lot of long-term wealth can be created by owning great American businesses. You know, it's been done a million times before and will continue to be in the future. So.
Yeah, so what are some of the benefits though of investing in stocks versus investing in, let's say, something else, or investing in a business, or investing in whatever it might be?
Well, first off, I'll say if you have a successful business already, or you have a really good idea for a business, I always say that's actually the best place to put your money, because you can probably make a lot of money from that business and then go ahead and stuff it into the stock market, okay? But let's say you don't have a successful business, or you don't have a plan for that, then let's say you just work a 9 to 5, well then your next option is let's go ahead and invest in the stock market. Obviously, you know, on real estate side, like we've talked about many times, there's definitely some costs and some barriers to entry costs, you know, there, especially, you know, in your market, LA, like you need to have a lot of money for that first down payment and whatnot. Stocks, you can get started way earlier, you know, with hundreds of dollars or maybe a few thousand and whatnot.
Yeah.
And then if you look at savings accounts, CD accounts, you're not getting, you know, crap for a return. The return's horrible there. So the way I view it is stock market investing is a realistic avenue for a ton of people out there, especially when you have a long-term vision.
Okay. Now, starting over from the beginning, what sort of strategy do you think is best for people just starting out? We have day trading, swing trading, long-term investing. What would you recommend for someone who's literally just starting out 2019?
Personally, regardless if they're new, if they're experienced, I always am impartial to long-term investing. You believe in a company, you think it's undervalued because you've looked at a million different metrics out there, right? You know, invest in that company, and like that, as that company grows and grows and grows, you should definitely grow your money as well, okay? Short term, anything can happen. But I think that's the most realistic way for the average Joe out there, and I think honestly it's the best way overall. It's a Warren Buffett strategy at the end of the day. You buy into a company, and if that company goes down, you buy some more, okay? If you feel that's a great business. Yeah. If it's a bad business and nothing ever works out long term, you make a bad business decision by investing your money there, then you have to, you know, eat the loss. But, you know, day trading, swing trading, things like that, I'm not saying people aren't making money, because there definitely are some people that can make money day trading or swing trading or things like that. But The way I view it is it's a very hard avenue to go down. Most people that go down that avenue, don't end up making money, okay? Long-term investing, you invested in Apple, Google 5 years ago, 10 years ago, like you've made a lot of money. These aren't complicated stocks to be in. If you want to get in some of the riskier stocks, then you're taking a bigger risk there. But long-term investing, especially in the bigger type corporations that you understand, you feel are undervalued, you look at all the metrics, you're gonna more than likely do very, very well for yourself over a 5, 10, 15, 20-year span.
Yeah. So what's the first way then to get started? If you're to say, what's the first step?
The first step is you got to ask yourself if you can handle volatility. Stocks are open every single day.
You should have said use the Robinhood affiliate link. Sorry, I had to say that.
You can see a stock price every single day, and that is scary, okay? Imagine, you're a real estate investor. Imagine if every single day, or not only every single day, but every single minute, sometimes during the day, the price in that real estate's changing. You're like, crap, my house number 4 just went down by $10,000. Oh my gosh.
Yeah.
With stocks, that's the issue, okay? You have to be able to handle volatility. You have to have the mindset that, that position could go down a lot in the short term. That may happen. You got to be able to handle that inside. If you can't handle that inside, then it's not the place for you. Then if you can handle that and you think this is something you're going to have the work ethic to, then you can go ahead and start researching companies, looking at their investor relations page. You can simply, let's say you want to look into Coca-Cola.
Yeah.
Type in Google, Coca-Cola investor relations page. You pull that up, start looking at all their documents, their 10K, 10Q, read about the company, learn about the company, look at the company's financials, and then when you're actually ready to start investing, then you can invest through something like a Robinhood. I invest personally through Fidelity Investments, but that, I suggest that more for people that have bigger type accounts.
So I was just about to ask you then, what are your favorite brokerages for people just starting out, and then also for people that are a little bit more advanced?
Personally, I use Fidelity Investments. I've been with them for about 10 years now. Their customer service is amazing, okay? I've called them up at 2, 3 in the morning before to talk about a strategy or talk about something here or there. They're there to speak to me, all right? However, if you got a smaller type account...
I can just imagine you, by the way, in your living room, and your wife's like, who are you talking to? It's like, it's just Fidelity. Honey, it's Fidelity. It's okay. And the other person's like, who was it? It's nobody, don't worry about it. About Elon Musk.
I have to talk to them at that time. No, so the customer support there is phenomenal.
Yeah.
Nothing bad I can say about that.
Okay.
And then Robinhood, definitely, if you have a smaller amount of money, it's worth it to go with them just for the simple fact that no trade commission. Through pretty much every other brokerage, you're paying at least $5 every time you buy a stock or sell a stock. So,
do you recommend paper trading first before anyone actually puts money at risk?
For long-term investing, not so much, because the payout is sometimes years down the road. If you're day trading, yes, you absolutely need to do paper trading. If you're swing trading, day trading, anything that is short-term volatility where you're doing short-term money type stuff, yes, you need a paper trade. However, for long-term investing, I'm investing in a company because I believe in them for the next 3 to 5 years. Whether I hold that stock or not is going to depend on a lot of factors. Maybe it goes up a ton, I sell it, okay? But paper trading is more for, I say, short-term investor. You want to do something there, you want to get in day trading, swing trading, paper trade. You want to long-term invest, start slowly. If you got a lot of money behind you, don't throw it all in your account at once. Build, get confidence in yourself, and go from there.
Yeah. So how do you begin first even finding stocks to trade, and where do you begin looking to find them?
I would recommend...
Besides your YouTube channel, obviously.
I mention a lot of stocks on the YouTube channel all the time. I always recommend downloading the CNBC app, maybe spending some time on Bloomberg, some of those things. They mention so many stocks in a given day, okay? I remember when I was first starting out, I would watch a lot of CNBC television and whatnot, and they would mention, if I watched, let's say for 2 hours, they would mention, 20, 30, 40 stocks that all of a sudden I could see, or I could see their tickers going on the bottom, and I could be like, let me look up that company. Then you go to Stock Tracker app if you have that. You go ahead and view that stock and start, getting in your mind, oh, maybe this is a company I want to look into. Then you go to their investor relations page and go from there. But I think you just kind of paying attention to CNBC, Bloomberg, YouTube channels like my own, maybe even things like Seeking Alpha, which is another phenomenal app out there, and you can start getting some ideas of what companies are, what stocks are available out there, and then you can take it from the next.
So what sort of charts do you look at, or what sort of earnings do you like, or what sort of news do you read that makes you bullish on a stock?
I read everything I can about a company I own personally, and any company I track, I try to read as much as possible. All news is relevant news. All news is relevant news, okay? There's nothing that I just totally dismiss. There's nothing I just totally go after. I'm reading everything, and I'm taking everything into account, okay? Charts, for me personally, as a long-term investor, it is not an important thing, okay? Warren Buffett doesn't look at charts, okay? He views a company, he says, is this company undervalued? Where's this company's growth going forward? Let me start putting money in this and acquire a position. Charts are not important for us. You're a short-term trader. Yes, charts are vital to you, and looking at, oh my gosh, stock got up to here, now it's going down. But I'm looking at the 10K, which is the annual report. I think that's the most important document you can read. You can find out all the information about a company, the financials, everything, and then you go from there. The 10Qs, listen to conference calls, and go from there.
So what do you like to see in a 10K?
In a 10K, I'm looking for, first, a business I understand. If it's a business I can't understand, it's not worth me investing. I don't care if they have the best financials in the world. I don't care if, everybody's hyped about that stock. If I can't fundamentally understand that business, why am I going to invest in it? It's not worth it, because what's going to happen is that stock will probably go down in the short term, maybe, and I'll end up selling out for a loss or something like that because I don't feel confident in the business. And that's what happens to people all the time. They don't know that business well enough. They don't know the insides and outsides to get that confidence to go through that volatility. And all of a sudden their position starts to go down. They panic. They sell for a 5% loss, 10% loss, 15% loss, 20% loss, whatever the case may be. And, that's an unfortunate thing. If you know that business inside and out, you don't make those types of decisions, okay? You make decisions based upon the business. And that's what's very important.
So what sort of bearish signs do you see in a 10K report or an earnings report or anything that you're like, always avoid that? That's a bad sign.
I try to never touch unprofitable companies. That's something I got killed with in the past. My worst investment ever in my life as far as a particular stock was a company named GoPro. I invested in that company. It was an unprofitable company. I need to stay away from unprofitable companies. It's not my strength, okay? So if it's unprofitable, not for me. Somebody else wants to trade it, try to make money out there, good for you. I'm investing in companies that actually make a profit at the end of the day, okay? And I want to invest in companies that have good balance sheets, that are loaded on cash, loaded on investments, and have as low a debt as possible. That way, when the cards come crumbling down, they can make it through it because they got that type of money behind them. Or if they want to go ahead and buy another company that's troubled or buy another company that's on the come up, they have the money to go and do that. It's a beautiful thing.
So how do you diversify your holdings then? Do you like to invest in a particular sector, or do you like to spread it out? And how do you recommend beginners first start allocating their portfolio? I'm
looking for many different stocks upon many different industries, okay? Now, I'm the most diversified I've ever been. It's mainly because I'm getting older. I'm still very young, but I'm getting older, and also my wealth has been building over the years, so I want to diversify more. However, if you're just getting started, it's not as important to diversify. Let's say you only have $100 to invest. Like, you could split that between, I don't know, one or two stocks maybe. A lot of stocks are $100+, so maybe you can only buy one stock with that. So you'll be, very into one stock at one time. If you're starting out and you're investing a ton of money, $10,000, $100,000, $1 million, diversify from the get-go and think about getting in different industries, in different businesses that you believe are going to do very well over the long term.
Okay. So how long do you think you should ideally hold a stock for?
When I go into position, I try to think 3 to 5 years out. That's my realistic kind of like goal. 10 years out, so much can change. However, if I'm only thinking a year out, I'm thinking too short term, and we're gonna base up things up on earnings and what an analyst says and a lot of different stuff. I'm thinking 3 to 5 years out. Doesn't mean I'll always hold a stock 3 to 5 years. It means that's my mindset going in. That stock might jump 20%, 50%, 100% in a real quick amount of time. Let's say I invest in it, and all of a sudden over the next year it jumps so much, I might sell out of it because I feel like now it's at a fair value. And if it's at a fair value, I want to sell out, okay? I'm sure if real estate was like that, a lot of people would be doing the same thing, right? If prices jump 50% or 100% in a year, a lot of people would be like, oh, let me take my profit here, and this house might be overvalued. So that's the way I think about it. My mindset's 3 to 5 years, but I might not hold it that long. It just depends on where that stock price goes.
How do you get over then the emotional aspect of owning a stock and having the price go down or having the price go up, and you thinking, oh my God, maybe how much money can I make, or it goes down? Did I make the biggest mistake of my life? That's been the hardest part for me with owning individual stocks. I don't own any individual stocks anymore because I see the price go down or up. and it just impacts me too much.
In my opinion, you've got to know everything about that business. You've got to have done, massive studying of that particular business to be that confident that you know that business like the back of your hand, and you can just say, I'm good. Like, it goes down short term, oh well, I'm going to buy some more. I still love the business, I'm going to buy some more, or hold that position because you know that business so well. What happens is most people don't do the type of work necessary to feel confident in that situation. So when their shares go down and some things happen, short-term volatility, and Trump said this and North Korea did this and this is going on in China, all of a sudden people panic, they sell all their shares, they sell all their stock market portfolios, generally for a loss, unfortunately.
Yeah.
And it's because they never even did the real work in the first place to give them that confidence to hold through the bad times.
So what about then tax treatment? Do you recommend people invest within like a Roth IRA or a 401k or a taxable account, or hold it for more than a year so they get the long-term capital gains? Like, how do you structure this, and what do you recommend for a beginner?
So for me, the goal is to try to hold stocks long-term. One reason is because I'm a long-term investor. The other reason is you are taxed much differently as a long-term investor than a short-term investor. So let's say I buy a stock today, and let's say that stock goes up a bunch, and I sell out next month. I'm going to be taxed at my normal tax rate, which might be 28% or 31% or something like that, versus if I hold that stock for a year or longer, I'm going to be taxed at around 15%. It's a massive, massive tax advantage to be a long-term investor, okay? And as far as, a Roth IRA versus, a traditional IRA or a traditional 401k, it depends on if you want to be taxed later on down the road or you want to be taxed now. And that's really, up to people for, to decide that out there. For me personally, I just try to stay long-term and the goal is to hold a business a year plus. If it doesn't work out that way, it doesn't work out that way.
So what industries do you personally believe are going to do really well over the next 5 years?
I don't necessarily look at it as a specific industry. A big trend I love is companies that have many growth levers to pull. So think about it from a perspective of there are certain business models that they only have one product or one service really, and they sell that one product or one service and they make their money off that. And when times are good, times are good. When times are bad, they're really bad, okay? Yeah. There are other companies, when I look at it, that have many growth levers, that have a ton of different things going for it. I'll give you, an example. Let's just talk about Apple for a minute. It's a, biggest company in the world. When you think about Apple, they have many growth levers. They not only have the iPhone as far as volumes potentially going up in future years, but they have the ASPs continue to rise, the average selling price per phone. They have services business, which is growing phenomenally. They have iPads they sell. They have Macs they sell. They have, headphones. Yeah. They have Apple Watches. They have so many different businesses to pull from that when I look at, those are the type of businesses I really want to be involved with that have many growth levers to pull. So that's the way I think about it.
Are there any industries that you think are just not going to be doing well over the next few years? Besides those indicators, like specific sectors, or you think maybe the marijuana stock, I think, is something that you've kind of covered?
Yeah, there are definitely some marijuana stocks out there that have some ridiculous valuations. I spoke about those. When Tilray went to $300 a share, that same day I posted a video and I'm like, guys, this stock is out of control. Okay, since then I think this stock's down 50+%. Yeah. There are definitely some sectors there. As far as a big one, I think auto industry is going to be hurt very bad. You think about this. Next time we have a recession, everybody's going to pull back. Right. And a lot of these automakers are still making ICE automobiles. And the wave is all in electric. And I think a lot of these companies are lagging. And that's why when people look at Ford and GM, they say, whoa, these companies look so cheap. Well, you're not pricing in the fact that these businesses can be in a massive, massive decline. Not only, regardless if we have a recession or not. Then you add a recession on the top, to some of those companies. And who's going to really want to fund those type of companies when they make ICE automobiles and we're changing to the electric wave? So, and the self-driving wave, who's going to want to buy, invest in Ford to get them through those times, or Chrysler or something like that. So that's something some people should think about. I think autos is a dangerous industry. And obviously, like we talked about, there's some speculation out there. Some of the marijuana stocks are definitely fit that criteria. So.
Yeah. Where do you personally see the market going over the next 5 years? I know it's kind of short term.
Yeah.
A lot.
If we're looking at 5 years, I'm always gonna be bullish. I'm always gonna be bullish 5 years out. Short term, anything can happen.
How about 3 years? How about 3? What's your personal belief.
I have to
or your intuition.
I haven't decided on that yet. I need to. What I do is at the end of every year, toward the end of every year, like November, December, what I go ahead and do is I look at all the economic indicators. Okay, I look at everything across the board. I listen to all the companies that are reporting in usually the October, November timeline, and I'm hearing a lot of what they're guiding out for the next year. A lot of them do guidance for what they expect for 2019. I'm listening to all that and I'm making that judgment. So I don't really want to make a prediction. Oh, the stock market's going to do that yet. I got to hear what companies expect. I got to hear the economic numbers, and then we can go from there.
And what do you say to the people who feel like we've been in such a long bull run? This can't last forever, and now that we're getting basically almost 10 years into it, that it's got to end. Like, this is the longest run we've had in a very long time. What are your thoughts for those people?
That's a question I get a lot, and that's a lot of the further up the mountain you get, the scarier it gets to look down. It's just how it is. Okay. First off, you got to understand we went through a massive recession. That's the first thing I tell people. Like that was one of the worst recessions we've had in a long, long time. Okay. And it took a long time to get out of that. Most people didn't feel like we were starting to get out of that recession until like 2012, okay? Right. So although the indicators said we were out of that recession in 2009, I think most people in general didn't feel like we were starting to get out till 2012. That's something to keep in mind there. Also, I'm not a believer that just because you haven't had a recession in, let's say, 8 years, you need to have one now or something like that. Yeah. Like, I'm not a believer in that because the economy is always changing. The industry dynamics are always changing. The political parties are always changing. So just because it's 8 years or 9 years since we had a recession or whatever people want to say out there, I don't think that necessarily means we're going to crash. I don't think it necessarily means we're going to have boom times. I think you just have to take it day by day and look at the indicators.
That's almost like the gambler's fallacy that if you flip heads 5 times in a row, the 6th time is more likely to be tails. Just
still
because
50-50.
It's still 50-50 every single roll. So it's a little bit like that when you mention that.
I've gotten into some trouble playing roulette doing that idea.
It's all about craps.
I'm like, I got to stick it on black again. Oh, it's going to come up black sooner or later, and then your bankroll's done.
It's all about craps and baccarat. That's what I think. Those are my favorite games. So anyway, Jeremy, thank you so much. And for all of you watching, I really hope this is a really good beginner tutorial of exactly what to look for when starting to trade stocks. And if this is something you want to get into, I think we have a lot of information here for you to get started. If you haven't already checked out Jeremy's channel, I'll put the link in the description. And I'm sure you better comment, and I'll pin your comment at the very top. Yeah, I guess you have to do that. So anyway, check out his channel if you want to learn more. And if you made it to the very end and you haven't already subscribed yet, make sure to smash that subscribe button. Smash that notification bell too, so YouTube notifies you anytime I upload a video, which they sometimes do. The whole algorithm is broken. Also, make sure to smash that like button. Add me on Snapchat and Instagram. I post there pretty much daily, so if you want to be a part of it there, feel free to add me there. And thank you again for watching. Until next time.